Imagine you are the CEO of a startup. You have developed an amazing product and people love it. But when you look at your financials, you're not sure if you're making money, losing money, or just breaking even. How do you figure this out? This is where financial statements come into play. Hello everyone. Today, we're going to learn the three key financial statements: the balance sheet, the income statement, and the cash flow statement. By the end of this lecture, you should be able to understand the purpose and components of a balance sheet, income statement, and cash flow statement. Interpret the information provided by each financial statement. Recognize how these statements interconnect to provide a comprehensive financial picture of a business. Alright, let's start with the balance sheet. The balance sheet provides a snapshot of a company's financial position at a specific point in time. It shows what the company owns, the company's assets, and what it owes, the company's liabilities, and the shareholders' equity. Think of balance sheet as a photograph of your financial health on a given day. It lists all your assets like cash, inventory, and property, as well as liabilities like loans and accounts payable. Imagine your personal finances. If you were to write down everything you own and everything you owe, you would have a personal balance sheet. For instance, if you have $10,000 in savings, a car worth $15,000, and a $5,000 student loan, your balance sheet would reflect these figures. The components of a balance sheet includes assets divided into current assets, which is cash or inventory, and non-current assets, which includes property, equipment, etc. Then we have liabilities, divided into, again, current liabilities, that is accounts payable or short-term debt, and long-term liabilities, that is mortgage and bonds. Then we have equity, the residual interest in the assets of the entity after deducting liabilities. The income statement shows a company's financial performance over a specific period. It summarizes revenues, expenses, and profit or loss. Think of the income statement as a movie of your business's financial performance over a period, like a month, quarter, or year. It shows how much money you made, which is called revenue, and how much money you spent, which is called expenses, resulting in either profit or loss. Imagine tracking your monthly spending. You list all your sources of income, such as your salary, any freelance work, and all your expenses like rent, groceries, and utilities. At the end of the month, you calculate whether you have surplus or deficit. The components include revenue, total income from sales of goods or services, expenses, costs incurred to generate revenue, including cost of goods sold, and operating expenses and taxes, and net income, the profit or loss after all expenses have been deducted from revenue. Finally, let's examine the cash flow statement. The cash flow statements show the flow of cash in and out of the business over a period. It's divided into three sections: operating activities, investing activities, and financing activities. Think of the cash flow statement as your bank statement. It tracks all the cash going in and out, helping you understand where your money is coming from and where it's going. Imagine managing your checking account. You record all deposits, that is income, and withdrawals, that is expenses. This helps you ensure you have enough cash to cover your bills and other expenses. The components include operating activities, cash flows related to core business operations, such as sales receipt and payments to suppliers. Investing activities, cash flows related to the purchase and sale of long-term assets like property and equipment. Financing activities, cash flows related to borrowing and repaying loans, issuing stocks, and paying dividends. Now let's do a quick exercise. Imagine you own a small coffee shop. Write down a simplified balance sheet, income statement, and cash flow statement for 1 month. List your assets, liabilities, revenues, expenses, and cash flows. As future business leaders, mastering financial statements will be essential for your success. Always remember that these tools are not just for accountants, they are vital for anyone involved in running or investing in a business. Choose a publicly traded company and analyze its latest financial statements. Identify key figures from the balance sheet, income statement, and cash flow statement, and discuss what they reveal about the company's financial health. For further reading, I recommend Financial Statements, a step-by-step guide to understanding and creating financial reports by Thomas Etelson. It provides a clear and practical approach to financial statements.